Hello everyone. Let's discuss about government budgeting from GS3 economy. So what is a fiscal deficit? Simply talking about how do we calculate or what is the basic meaning of a fiscal deficit. So in this context, we can say कि deficit कब होता है when you are spending more than what you are earning or you are spending more than your income. Similar is the case with the fiscal deficit that government is spending more than what it is earning. So in again technical terms, it is the difference between the total expenditure of the government, both the capital and the revenue expenditure, and the total income of the government, which excludes the borrowings. This is the key part here, excluding the borrowings. Now, here we see that there are different ways through which government can finance its fiscal deficit through issuing, for example, the dated securities, or which are also known as the gilt-edged securities issued by the government, through National Small Savings Fund. It can be through the Provident Funds and the sovereign gold bonds. So here the issue is that financing the fiscal deficit through issuing the gold bonds is turning out to be costly. Why is it so? We'll look into the reasons, and because of which the government has been shifting to other means to finance the fiscal deficit. So, what are sovereign gold bonds? Firstly, we'll understand that. So, these are the debt securities which are issued by RBI on behalf of the government. So, this is one important fact. And each unit in this bond, it represents 1 gram of gold. And these bonds are offering the flexibility of trading in the secondary market, in the capital market particularly. It offers you fixed interest income, which is 2.5% per annum on the amount of your total investment. And the tenor of the bond is 8 years, and you can redeem it after 5 years prematurely. Now, there are several benefits to the investors that you do not have to hold any physical gold, there is no risk, there is again zero cost of holding these bonds. Plus, you get assured returns at the market prices. Because the returns are linked to the market prices, this is the main reason why it is turning out to be costlier for the government to finance the fiscal deficit through this mechanism. Because over a time period, we are seeing that the market prices of gold has increased, it has shooted sharply. So because of this, we see that earlier government used to issue 10 tranches of the gold bonds in one single year. It has now been reduced to two, and this year, so far, government has not issued this even a single time. Also, government tried to control the prices by, we can say, reducing the customs duty from 15% to 6%. But there are demand side factors also associated with. There are some seasonal and the festival reasons also related to the increasing gold buying in India. So that is why government is thinking about that we can do away with this mechanism of financing the fiscal deficit. Because ultimately we have the target of fiscal consolidation under the FRBM Act, the Fiscal Responsibility and Budget Management Act, which needs to be looked into, which is not just associated with the quantity aspect, but again, the quality or the way of reducing that fiscal deficit. Meet you with the next topic in the new video.